days, running a short-term rental is a lot more difficult than it used to be. Utility bills keep climbing, those Instagram-worthy amenities cost more every season, and of course, you know the other Airbnb down the street? Yeah, they just added a hot tub. And of course, they just dropped their nightly rates for this weekend. What are you gonna do? The good news is that when every dollar counts, you can stay ahead with smart tax deductions. Today, we're breaking down 15 short-term rental tax deductions to help you offset rising costs and keep those profits strong, whether you have one Airbnb or an entire portfolio. Number 1. Cleaning and maintenance costs. Are Airbnb cleaning fees tax deductible? Yes. Cleaning costs are tax deductible because they're part of running your short-term rental. This includes regular cleaning between stays and supplies you might use, or professional cleaning services when you need a deep cleaning, like carpet steaming or window washing. Other upkeep services like lawn care, pool cleaning, and HVAC maintenance and repairs for normal wear and tear are also deductible. Just keep receipts and records so you can claim these expenses and lower your taxable income. Number 2. Insurance premiums. Insurance is a key expense for short-term rental hosts, and you can deduct those premium payments. This includes homeowners insurance with a rental rider dedicated to short-term rental policies and liability insurance for guest-related incidents. For example, if you pay $12,000 a year for short-term rental coverage, you can deduct the full amount from your taxable income. Just make sure the policy fits your property's needs and keep records of all premium payments. Number 3. Property management fees. Fees that you pay to property managers or software that helps you run your short-term rental count as business expenses. This includes full-service property management as well as property management software like Uplisting. Whether you hire someone or use software, these costs save you time and are tax deductible. Just remember to keep track of what you're paying. Number 4. Mortgage interests and property taxes. If your property is only used as a rental, you can deduct the interest portion of your mortgage payments and 100% of your property taxes. For example, if you pay $8,000 in mortgage interest and $4,000 in property taxes, you can deduct the full $12,000, lowering your taxable income. And here's a major change from the One Big Beautiful Bill Act. The cap on state and local tax deductions has jumped from $10,000 to $40,000 for most filers through 2029. A big win if you own property in a high-tax state. If you have mixed use, that means that you use the property for yourself, you'll need to deduct only the portion based on rental days. So if you rent 60% of the year, then you can deduct 60% of the costs. Remember to keep clear records for rentals versus personal days. Number 5. Utilities. Utilities and internet, electricity, water, gas, and Wi-Fi are all deductible because they're essential for guest comfort and they're fully deductible if they're used for your short-term rental. Since these services are considered necessary operating expenses, you can claim them on your tax return. If you also use the property personally, only deduct the portion used for rental days. Save your bills and records so you don't miss the easy tax break. Furnishings and appliances. Setting up your space can be an expensive investment. Fortunately, it also pays off during tax season. Beds, sofas, kitchen appliances, and even decor like rugs or artwork are used for your guests and are deductible. For big purchases like a fridge or a dishwasher, you can spread deductions over several years with depreciation. Keep receipts and consider a cost segregation analysis to classify assets into 5, 7, or 15-year depreciation categories. We'll talk a bit more about this in point 12. Number 7. Advertising and marketing. Spending money on marketing is great because it can do two things: bring in more guests and lower your taxes. Many marketing costs can be deducted as business expenses, like professional photos, social media tools, and online ads. You can also deduct costs for tools like Canva to make social media posts or ads, and the cost of running those ads on Google or Facebook is also deductible. Even creating your own direct booking website can be claimed as an expense. Local partnerships, like giving guests discounts on nearby restaurants, can also count as promotional spending. Number 8. Startup costs. Expenses such as legal fees, accounting services, and permits required before launching your rental may qualify as startup costs. The IRS lets you deduct up to $5,000 of startup costs in your first year, and spread the rest out over several years. For example, if you spend $7,000, you can deduct $5,000 now and $2,000 over time. However, this deduction depends on your situation. If you're setting up a brand new rental or turning your home into an Airbnb, it likely applies. But if you're just adding another property to an existing business, it may not. These rules can be tricky, so talk to a tax professional to see if you qualify. Number 9. Home office expenses. If you run your Airbnb business from a home office, you can deduct part of your home expenses like utilities, internet, office supplies, and even office equipment. However, Your office must be used only for your rental work and used regularly. So for example, if your office is 10% of your home size, you can deduct 10% of your electricity, heating, and internet costs. This is a great way to reduce taxes for the work you do behind the scenes. Just remember, keep good records so you don't miss out on these deductions. Number 10, travel and transportation. So what if you have a property that's far away from where you live? Well, good news. Trips to check on your property can save you money at tax time. Travel expenses like miles driven, flights, hotel stays, parking fees, tolls, and rental cars can all be deductible. And this also applies if you attend rental industry events. So if you drive 2,000 miles in a year to check on your rental, using the 2023 IRS rate of 65.5 cents per mile, that is about $1,310 in deductions. Number 11, guest amenities. We've talked about how guests love amenities like coffee, snacks, toiletries, and hand towels. Well, all of these are considered business expenses and are deductible. Spending $600 a year on coffee and snacks plus $800 on toiletries adds up to $1,400 in possible deductions. Even welcome baskets and seasonal decor may qualify. Number 12, depreciation. Your property loses value over time from normal wear and tear, and the IRS lets you deduct a part of that loss each year through depreciation. For most short-term rentals, you can spread this deduction over 27.5 years. But 2025 tax legislation changes the game. Qualifying improvements, appliances, and furnishings can now be deducted in full in the year that you buy them thanks to 100% bonus depreciation. Plus, the qualified business income deduction for short-term rental owners is now permanent, offering up to 20% deduction on net rental income if your rental qualifies as a business. Number 13, home repairs and renovations. Maintaining a home can be expensive, and fixes can seldom wait in a short-term rental. Luckily, fixing and maintaining your rental can be tax deductible. Things like plumbing repairs, painting, carpet replacement, or fixture updates all apply. Small repairs and regular upkeep like fixing leaks or repainting can often be deducted right away. But big renovations like a full kitchen remodel may need to be depreciated and deducted over time. Number 14, professional services. Running a successful short-term rental often means building a solid team of professionals. Those relationships could come with tax benefits. Accountants, tax pros, bookkeepers, lawyers, and consultants all help you run your business, and so their fees can be deducted. Number 15, subscription and software fees. Modern rentals rely on digital tools and services, and many of those costs can be deducted. From property management software like Uplisting to smart home tech and streaming subscriptions, if it helps you manage, market, or improve the guest experience, it's likely a deductible expense. Owning a short-term rental isn't just about welcoming guests. It's also about being smart with your money. From coffee and comfy towels to mileage and marketing, your expenses could mean big savings at tax time. The key? Track everything. Save receipts, log your miles, and keep good records. Then, work with a tax professional to make sure you're getting every deduction that you deserve. Smart spending today can mean a lower tax bill tomorrow and more cash to reinvest in your rental or put straight into your pocket. If you found this video helpful, give us a thumbs up and subscribe for more taxes and income recommendations for your Airbnb. We also have tons of different videos on our YouTube channel that you can check out. If you have any questions or tips, be sure to leave them in the comments below. We love hearing from you. Happy hosting, and see you next time.